Hi guys, good morning and welcome to this Money Control live stream. I'm Nandita Khemka and I'm back in the studios. It is a Tuesday morning. The cues coming out of global markets are fairly positive, although the GIFT Nifty was hinting at a muted start. But of course, we snapped out of an 8-day winning streak yesterday. The bulls took a break after an 8-day sprint. But today it's the weekly FNO expiry as well, so expect fair bit of volatility. But let's see whether or not we can actually resume the up move that we've seen, over the last 8 sessions or not. Yesterday, of course, was a day of break. After cooling their heels, we'll have to see whether the bulls manage to reclaim some lost ground. Given the fact that we also have the resumption of trade talks between the US and India. So that is something that could have some bit of bearing on sentiment, and of course also the fact that the FOMC meeting kicks off tonight. It's a 2-day meeting, and tomorrow night is when we'll get a decision from the US Federal Reserve. And of course expectations are that there will be a 25 basis point rate cut by the US Fed. So yes, all these global cues will be watched out for, and of course we'll also be watching out for any kind of thaw in US India trade talks. So yes, lots to watch out for, lots of stocks in focus as well, and all your queries will also be taken up with our expert on the show. So if you have any queries, keep them coming in on a live feed. We will try and get them addressed for you as well. But before we move any further, quickly take a look at the top stories at this hour. Wall Street ends higher with the S&P 500 closing above that 6,600 mark for the first time, and the Nasdaq too notching record highs. Investors cheer US President Trump's positive comments on trade with China. In fact, the 2-day FOMC meeting also begins today. The CME Fed Watch tool indicates a 100% chance of a 25 basis point rate cut by the US Central Bank. Asian markets open higher, tracking gains from Wall Street. Japan's Nikkei breaches 45,000 mark for the first time to hit a fresh high. The GIFT Nifty, meanwhile, is indicating a flat start for our markets. Crude prices hold steady as traders contemplate potential supply disruption from Russia after Ukrainian drone attacks on its refineries. Meanwhile, gold prices hit record high as dollar and yields ease. America's top trade negotiator Brendan Lynch has arrived in India and will hold negotiations for the first time since Trump administration imposed 50% tariffs on the country. And US and China reach a framework agreement on TikTok. Treasury Secretary Scott Bessent says Trump and Chinese President Xi will hold a call on Friday. Well, before we come to all the market action, let's just see what is happening on the trade front. The US trade team, led by Assistant US Trade Representative for South and Central Asia, Brendan Lynch, is in the capital and set to engage with Commerce Ministry officials today. Now, in what will be the first in-person talks between the two countries after the high-stakes negotiations for a trade deal broke down, officials in New Delhi said the US team is likely to be here only for a day. And the talks between India and the US hit a pause after the US imposed an additional 25% tariffs effective 27th of August on India for purchasing Russian oil, in addition to the 25% reciprocal tariffs that became effective earlier on the 7th of August. Remember, there have been a series of tweets also coming in from President Trump and Prime Minister Modi that was hinting at some bit of thaw in relations between US and India. So yes, this is an important development that the street will be watching out for, and any cues coming out of the trade talks that happened today in the capital, keep an eye out for that for sure, because that will of course have a bearing on the market sentiment as well. But quickly take a short recap of what really transpired yesterday. We saw a mixed close. Broader markets, of course, continued to outperform benchmarks. The Sensex and Nifty, meanwhile, snapped an 8-day gaining streak. In fact, the Nifty also failed to hold on to the 25,100 mark. But important to note that the index has been making higher highs and higher lows. So that's one thing that the street will take heart from. The mid-cap outperformance, of course, kept the market breath in favor of advances. Reliance managed to lend some support to the index. You had IT and Pharma. Those were, the key drags yesterday. Autos also continue to see profit booking. Of course, auto stocks have seen a very strong run since 15th August, but off late, some bit of profit taking has also kicked in when it comes to auto names. Of course, the likes of M&M and Aisha, those were the top laggards yesterday. There was some pressure on the pharma pack as well yesterday. Dr. Reddy's, Cipla, some of these stocks slipped somewhere around 1 to 2% also. But PSU names have been doing extremely well in the past few sessions, and they continue to see buying yesterday as well. The likes of Hudco, IRDA, NHPC, all of these counters rallied anywhere between 3 to 4%. Railway stocks as well, on an upward trajectory, back on the right track, so to say. Some of these railway stocks have been doing extremely well on the back of expectations of higher government orders. But realty, that really stood tall yesterday. That index was up nearly 3% or so. The likes of Prestige, DLF, Oberoi Realty, all of them were up somewhere around 2%. And of course, there were some other movers, the likes of GMR Power, that were up somewhere around 11% or thereabouts. But Bajaj Finance, that stock deserves mention. It hit a fresh record high. In fact, the rally on Bajaj Finance extended for a 13th straight day. Well, in terms of the futures and options cues, put call ratio fell to 1.08 versus 1.29 in the previous session. Few stocks that will be in F&O ban are the likes of HFCL, Oracle Finance, RBL Bank. There's been a new addition, Angel One, that enters F&O ban today. FIs continue to be net sellers, 1268 crore worth of stocks sold in the cash market, but DI buying support continues, almost 2000 crore worth of stocks bought in the cash market. But to understand what are the key levels to watch out for, whether we see some bit of up move on expiry day or not, let's get on board Ajit Mishra, Senior VP Technical Research at Religare Broking. Ajit, always lovely chatting with you. It's a good Tuesday morning. Global cues fairly positive, but if you look at GIFT Nifty for cues, not poised for a great start. After yesterday's short break, would you expect some bit of a recovery to kick in today? What is the setup looking like? Can you expect 25,100 back, or would you say that we will remain will remain sideways as it's weekly expiry as well today?
Yeah, good morning, Nandita. So, thank you for having me. And yes, we are seeing a bit of a pause. And Nandita, if you see that it's almost like a roller coaster ride for the markets, means we were here at this level, in the August month highs around 25,150, and we are back to the square. This time around, we made a higher lows, and we saw the recovery across the board. The two key sectors which were sitting on the sidelines earlier, like banking and IT, we started seeing a bit of attraction from both. Now the key is that banking, Nandita, which is lacking momentum due to the underperformance of the private banking majors. That would be the key catalyst for the next leg of the move to surpass this 25,150 level decisively and inch toward 25,250 or 500 in days to come. So as of now, one should keep a close eye on 55,000 mark. Yesterday, banking index did make an attempt, but it couldn't sustain. So I feel that the other sectors or themes like railways, defense, they are offering you buying opportunities in the interim. So until we see some sign of decisiveness or momentum in the banking index, this sideways tone might continue in the Nifty. But at the same time, since we are seeing rotational buying across the other sectors, the tone during this consolidation is likely to remain positive. So the focus should be more on buying opportunities across sectors which are showing a relatively higher strength. So consolidation will continue on the expiry day, but yes, the tone is likely to remain positive.
Okay, the tone is likely to remain positive, but how would you look at some of these PSU names? PSUs in particular have been doing well, and even the if you look at banks, PSU leg has been doing well. So anything that stands out when it comes to the PSU banking universe?
So certainly, because when it comes to recovery, in the heavyweights or the second rankers also, so be it Bank of India, Indian Bank is anyways trading at the record highs. Then we have SBI also, which is gradually seeing recovery. So yes, the top 4-5 names, they are comparatively doing well in in comparison to the private banking heavyweights. And this might continue, though for the PSU banking index, we are also very close to the immediate resistance. So 7150 for the PSU banking index is where we have resistance, which is just 50 points away from the current area. So we might see some consolidation in the PSU pack also. But yes, in comparison to the private banking majors, we expect this outperformance to continue. So the focus should be more on the top performers like Bank of India, Indian Bank, SBI, Canara Bank, amongst the PSU banking pack for fresh longs.
Okay, that's the view. Some of these banking names near record levels, focus in on them as well. Of course, we'll be keeping an eye out on the Nifty Bank Index as well. As you mentioned, it did make a dash at that 55,000 level, but failed to really hold on to that. But in particular, you mentioned quite a few names. I don't think you really mentioned Canara Bank. Any thoughts there? It's ARM. Canara HSBC Life has got the SEBI nod for an IPO prospectus as well. How would you look at a Canara Bank within the mid-sized PSU banks?
Yeah, so the recovery was decent, means from 100 to 212, and that's the swing high that the stock tested last time. So we expect, in case it manages to cross this barrier around 113, 114, then probably we can see the next leg of momentum, which could help the stock to inch towards record high zone, which is around 120 area. So yes, it looks comparatively better, and as I've said, one can continue to accumulate PSU bank even if the consolidation continues. So for Canara Bank, the stop is at 109. So with that as a stop loss, you can definitely look for long positions with 118, 120 as a positional targets.
Okay, that's about PSU banks. But one sector that was standing tall yesterday on firm ground was the real estate pack. That index was up somewhere around 3%. But real estate stocks have seen a lot of hammering. If you look at the real estate index per se, it's down over 20% from its 52-week highs. Yesterday's momentum, would you expect that to continue? And how would you look at stocks like DLF, Prestige, and even Anant Raj for that matter? That stock was up somewhere around 13 or 11% yesterday.
That's true. And like you rightly mentioned, that post the decline, a sharp decline, the realty index is also seeing some sign of recovery. But for the index, we have still multiple resistances around 920, 940 area. It's still trading below the long-term averages. So there could be a bit of a breather, after the initial up move. Among all these names, DLF definitely looks promising. Means after retesting its long-term averages, it formed a base around 740, 760 zone, and now we are seeing this recovery. So we expect this recovery to further strengthen. And for DLF specifically, 810 is what we are eyeing as the immediate target. So with stop at 758, one can definitely look to go long in DLF.
Okay, look to go long on a DLF. One stock that has entered the FNO ban is Angel One, and of course, we've seen a roller coaster for stocks like BSC and Angel One, especially because of the SEBI consultation paper that would have obviously come out on the longer duration FNO expiry as well. So that has been an overhang for stocks like Angel One, BSC. And now with Angel One in the ban, how would you look at it?
See, broadly, if you see, it's almost a year now that, in fact, more than that, the stock has been trading in this broader range, 2030-400. So we are again inching towards the lower band of the same. Yesterday, though, there was a marginal uptick, but I doubt that it can sustain until we surpass this 2350 barrier, which is the 20 EMA mark, for any meaningful recovery. And a break below 2150 can result in further decline towards the lower band, which is around 2000 levels. So as of now, it's an avoid. In case if you are holding any long position, 2150 should strictly be your stop loss. And in case of rebound, also you should consider reducing your position. Because 2360 and then 2500 is multiple hurdles that the stock had to cross.
Okay, that's the view then. Just about 2 minutes to go for the markets to open. Any recommendations, Ajit, this morning?
Yeah, so DLF definitely tops the list. Post this yesterday's move, it was almost like 5-6 weeks of corrective trend and then the space formation. So we expect this recovery to further strengthen, and the outperformance within the reality space is something that we are anticipating in DLF. So 810, like what you recommended as a target. So with stop at 758, one can go long in DLF at current levels. Then we have Siemens also from the capital good basket. Means yesterday we were seeing L&T and Siemens both are doing exceptionally well. Siemens, particularly, we have seen a consolidation range breakout. The stock has reclaimed the long-term averages. So all indications are in the favor that this recovery is likely to further strengthen, and 35.40 is something that the stock might test in the near future. So with stop at 32.20, one can go long in Siemens as well.
All right, DLF Siemens, those are some of the recommendations coming in from Ajit. But Ajit, hold that thought. First ticks coming in, and it's on the positive side. 35-point uptick on the index. The Nifty is back above that 25,100 mark. So although we were expecting a muted open, we've seen a positive one. So one should take heart from that, given the fact that the GIFT Nifty was hinting at a start with a negative bias. But thankfully, that hasn't really happened. 100-point up move on the Sensex, that's at 81,900 or so. Mid-cap index continuing its up move, almost up 0.2%. The Nifty Bank is looking iffy at the current juncture. It's trading, it's flitting between the negative and positive zone, managing to hold around that 54,900 mark. We'll have to see whether or not it manages to gain traction and once again make a dash at that 55,000 level. Very important for the Nifty Bank to really fire up. To see any fireworks on the index, as our experts have also been pointing out. Advance decline ratio very strong at this juncture, but we'll have to wait for it to settle down to really call it a trend. Almost 4:1, that's the NSE advance decline ratio, 1600 stocks advancing to 400 stocks declining. Let's take a look at the sectoral picture then. Which are the sectors that are taking the lead? Because yesterday autos were under selling pressure. You had pharma that was on the back foot, IT as well, but realty is one pocket that really lends some kind of support to the index. But today I can see all the sectors are trading in the green. They've opened up with a positive bias. The Nifty Auto Index is up 0.5%, followed by metals. They are up 0.3%. Even pharma is seeing buying interest. That's up 0.3%. Real estate, that index is also up, trading higher by 0.2% with a positive bias. So most of the sectors are trading in the green. So all in all, it is a fairly positive start. Nothing really to complain about. After yesterday's day-long break, the bulls are trying to make some bit of a comeback. Although it's very, very feeble right now. Let's see whether we see some kind of momentum as we go forward. The mid-cap index although has slipped into the red. Nifty Bank as well, trying to hold its head above water, but right now it's in the negative zone. In terms of individual movers then, take a look at which are the stocks that are leading from the front. So some of these auto names are back on their feet after a few sessions of profit taking. You have Hero MotoCorp, that's the top Nifty gainer, that's up just 1%, followed by M&M, that's up 1% as well. Bajaj Finserv continues its upward move. Ultratech Cement is the other one that's seeing some traction. Adani Enterprises, that stock is in focus. It has received an LOA from Kedarnath Ropeway project worth 4,000 crore rupees. Some bit of positive rub-off of that as well on Adani Enterprises. Your Ultratech Cement doing well, as I mentioned. Kotak Mahindra Bank, Maruti Bajaj Auto, Cipla as well has managed to edge back into the green. So, it looks like the gainers list is far longer than the losers list. And Titan, that's the top laggard on the Nifty, followed by an IndusInd Bank, Nestle, Asian Paints, Bharat Electronics and SBI. So, some of these banking names are in the red, even HDFC Bank for that matter, and consumption names like Titan, Nestle, Asian Paints are under selling pressure. Some IT names are also on the losers list, the likes of Wipro, HCL Tech, out of favor yesterday as well. Some of these names were under pressure. So yes, all in all, open has been pretty okay, but IT, some banking names continue to witness some selling pressure. So is the case for the likes of Titan. But I want to get your thoughts on a Bajaj Finance. What do you do with the stock? It's it hit a record high yesterday. and it has been on a gaining streak for almost 2 weeks. Any levels on the higher side that you'll be watchful of for a Bajaj Finance? And is it a good time to take some profits? How would you look at it?
So yes, like from 860 to 1020, almost a vertical rise. There was marginal pause in between, but the tone looks positive, and the consolidation range, which it was experiencing earlier. So it's a decisive break, and I would say that this momentum is likely to continue. But yes, if the view is very short term, there's no harm booking at least partial profit around current area. Let the stock consolidate a bit, means in the range of 980 to 1020 in case it consolidate for a couple of sessions. Then we'll have a newer base to watch out for. But in case if somebody is okay holding it for a month or two, then definitely they can continue with their long positions with 965 as a stop loss and upside around 1080 to 1120 positionally as a target area.
Okay, that's the view on Bajaj Finance. One stock that's among the nifty gainers is Adani Enterprises. It has received a letter of approval for Kedarnath ropeway project worth 4,000 crore rupees. If you look at the counter, it has been fairly steady in the last month or so. No fireworks as such, but it has managed to give positive returns. Still at 2,400 levels. Do you expect the stock to head higher from here? Because, although the stock has clocked in gains, there is, no fireworks as such on the charts for this particular name. How would you expect it to move forward from here?
So that's right, Ananta. If you see, it's almost like 8-9 months now that stock is maintaining this band 2200, 2600. So again, we are very close to the long-term averages. So I doubt that until we surpass this hurdle around 2460, 2470 decisively, we can build on this recent up move. At the same time, a break below 2350 might negate the positive bias and put this stock again on the backward, means the consolidation might extend further. So as of now, the risk reward is not favorable for any fresh long position. One should wait for a decisive close above 2470 for fresh leg of the up move toward 2650 or maybe higher.
Okay, that's a view on Adani Enterprises. One more stock, NCC, that's seeing good traction in trade today, up in excess of 2%. It has bagged orders worth 2,090 crore rupees from the Bihar government for construction of Barner Reservoir scheme. The stock, saw good traction in the last 6 months, but I think last 1 month it once again slipped into consolidation. YTD charts are giving negative signals. Of course, it's shed 20% on a YTD basis. How would you trade on an NCC here on? Would you expect some kind of trend to be established, or would you say that these moves that we see, the news-based moves, are just sporadic ones?
See, this is what we are seeing in the stock for almost 4-5 months. Means the struggle to cross or inch towards long-term averages is something that sellers are very aggressive around that area. So around 225, 226 is where we have the next hurdle, the 20 EMA zone. Today also, after the initial uptick, we are seeing that profit taking is merging at the higher end. So I'm not very convinced with this up move, though we are seeing decent volumes. Let the stock surpass this 226 hurdle, then only one should look for any fresh decisive trend or fresh long position in the stock. Otherwise, the sideways tone might continue.
Okay, not really convinced with the moves that we are witnessing on the charts of NCC. One more stock before we come to our queries, Transrail Lighting. It has bagged an order worth 420 crore rupees in Africa, and with this, its FY26 order inflow has crossed the 3,500 crore rupee mark. The stock saw a very good run, but it has slowed down. It has lost steam. At these levels, 803, how would you trade into this particular counter? And look at the highs. It's not very far actually from its highs, 855. It's at 801 or so. But after the pause, do you expect the stock to retest those levels, 850, 855?
So yeah, possibly yes, because if you see that stock is experiencing consolidation around its record highs while holding for the short-term averages, so it's a good sign basically. So as long as you are maintaining above 770 area, it's okay to hold the stock. In fact, yes, the momentum is missing, and that we will see once the stock surpasses 820 mark, then probably a newer high may be like 860, 870, something that the stock might test. So with the stop at 770, yes, you can continue to hold your longs. You can in fact look for fresh long positions also.
All right, that's the view on Transrail. But let's shift focus to our viewer queries then, quite a few of them. And a couple of stocks we've already discussed. So maybe you can go back in the feed and check for a Canara Bank, for instance. Shweta, we have discussed that stock. You can perhaps go back in the feed and check out Ajit's view on that stock. Same goes for DLF. In fact, DLF is one of his picks, stock recommendations. So you can go back in the feed and check that as well, Geetu, Sandesh. But let's shift focus on a query that has come in from Sandeep Poddar. It's on GMR Power. That stock saw a very good up move yesterday, backed by good volumes. Sandeep wants to know the perspective or your perspective on the stock with a 3-month time horizon. He has 200 units of the stock for the last 6 months. Over the next 3 months, what do you expect and what should he do?
So I understand means the last 6 month is like a range bound session or trade for the stock, and now at least finally we are seeing traction with the volumes which is needed, and we believe that the moment we cross 140-42 levels decisively on this, then probably we are set for the new record highs, means 165, 170 levels. So definitely you should stay put. Now 120 should act as a strong base, so with that as a stop loss, positional target of 150, 160, the risk reward is favorable.
Okay, that's about GMR Power. Hold on to it, risk reward favorable. Let's look at some other queries then. There's a query on Hudco. Gnana Prakasam wants to know your thoughts on this stock for the short term. As I mentioned earlier, PSU stocks have been on a tear of late, and Hudco is also one of them. Any thoughts in the short term? How far it can go from here?
Yes, so and we were seeing almost like 3 month long consolidation phase, which has finally ended because the stock was trading in a very tight range around its long term averages from the last 1 week, and yesterday we had a decisive breakout with volume. So we expect a marginal breather due to the call positioning at 225. That might act as an immediate resistance, but the moment we cross this, then probably around 240, 245 is something the stock might attempt. And now 215 is a strong base. So with that as a stop loss, yes, you can continue to hold your longs. You can buy fresh also.
Okay, continue to hold. You can buy fresh also. That's the call on Hudco. But let's talk about some of the railway and defense stocks, because railway stocks have come back on track, so to say. I had spotted a query on Concor. This one's from Alex. Wants to know the important support levels and how are some of the other stocks also looking like on the charts now. They've seen a long corrective phase. So do you think it's this renewed momentum in the railway stocks will sustain?
Yes, in some of these names, definitely means the recovery is decisive, means be it Railtel, Titagarh. Concor also we are seeing a bit of a rebound, but the first hurdle is close around 574 mark and then around 590, 95. So as of now, yes, you can continue to hold your long in Concor also because the stock has reclaimed short-term averages. So that should act as a support now. So 550 as a immediate support, with 575 being the first target area, and then 590.
Okay, that's the view on railway stocks, particularly Concor. Hope that answers your query. There's a query on Yatharth Hospital that's coming from Lavanch Sarthak. This stock is close to its highs of 820 or so. The stock has given good returns. Yatharth. I think last 6 months, of course, we've seen the stock almost double or so. And any thoughts here? If is it a fresh buy, or if somebody is holding on, should they book profits?
So trend looks positive. There's no doubt about it, and as you rightly mentioned, it has doubled in the recent months. So there could be a bit of a consolidation, though there is no sign of exhaustion yet. So as of now, yes, you can continue to stay. But for fresh buying, I would rather wait for any dip around, let's say 765, 770 area, means 20, 30 points down from the current levels, because 750 is what we have the immediate base uh, as a stop loss. So 50 point in case if you're holding long position, and in case if you're aggressive traders, then you can maintain a stop at 765 also, and keep on trailing your stop losses on rise, because stock is in uncharted territory and the upside is open.
Got your point. Ajit, last bunch of queries then. There's a query that's come in on, Hyundai Motors. Mukul Vaidya wants to know whether a fresh entry could be looked at for the next 3 months. We also have a query coming in on Ola Electric from Shweta as to whether one should look at this counter for a fresh buy. What would your advice be?
So Hyundai definitely looks promising. Means in fact the entire auto pack, if you exclude couple of names wherein we are seeing underperformance like Tata Motors, majority of the counters are either trading at 52 weeks high or trading at the record highs level. So Hyundai after this pause is basically offering you a fresh buying opportunity, and I believe that 2500 is a very strong base. So with that as a stop loss, one can continue to hold longs. You can buy fresh also. The moment we cross 2620, then we'll see the next leg of the up move, which could help the stock to inch towards 3000 plus levels. So yes, you can go for long. Ola, in the last two trading session, we were seeing bit of a recovery. The stock has reclaimed its averages again, but I'm not very convinced because it was almost a vertical rise, from 40 to 70. So it should spend at least some time around the current area before we see the next strong directional move. So a base formation is likely in the range of 56 to 62. Uh, Existing position, you can hold with the 58 as an immediate stop, and around 62, 64 levels, you should try to book some profits.
All right, that's the view on Hyundai Motors and Ola. Hope that answers your queries. But with that, we've come to the end of the query segment. If we couldn't take up your queries, don't worry. Send them in tomorrow. We will get them addressed because of lack of time. We couldn't really take up all the queries today. But with that, Ajit would like to thank you, as always, for joining in, sharing your thoughts, sharing your recommendations, and also helping our viewers navigate their queries with respect to stocks. But thank you, Ajit. Have a great day, and I hope to connect again sometime soon.
Certainly. Thanks.
Well, then that was Ajit with the market technicals. Sure. Markets are picking up steam, up 50 points on the Nifty now. We've reclaimed that 25,100 mark. Decisively, the Nifty's Sensex is also around that above that 81,900 mark, and the mid cap index also holding firm. But on that note, bring your big market voice. Joining me is A Balasubramanian, MD and CEO, Aditya Birla Sun Life AMC. Bala, as always, lovely chatting with you. Good to have an authoritative market voice on our shows. I always enjoy getting your perspective in on various topics. But let's talk about the sentiment, how it has turned. September is usually, a forgettable month for markets, both globally as well as domestically. But this month, things have turned around a bit after the recent underperformance. We've managed to take a U-turn. We've seen good up move since the start of the month. Even globally, Wall Street has been hitting record highs, almost every other day. What do you think will move the needle for us? Although we have started started participating, so to say, but we have a resumption in US-India trade talks as well. Do you think that could provide a further leg up going forward, or do you expect it to remain how we are?
Yeah, the voice was getting cut. Are you able to hear me? Can you hear me?
I can hear you. Is my voice reaching you, Bala?
It was not reaching for
I
some
can hear
times.
you.
Okay. No, thanks, Nandita, for having me part of the show. I think the way I see is September, as you rightly said, generally people have expectations because it's the second quarter of Indian financial market. But I think the stability has come on the basis of the hope that one, India has been taking steps which will actually boost the consumption in India. I think post these tariff reductions, or rather tariff agreement, which did not come to a conclusions as quickly as it was expected. And the India will continue to focus on negotiating with the US on tariff. At the same time, what are the challenges which is being posed by tariff towards India also is being addressed by way of focusing on inward in terms of making Indian economic growth independent of whatever happens to the world market. That's what I think the beauty of India is actually is the largely self-sufficient in most of the areas. At the same time, we can't ignore what we produce in India, which is actually exported overseas market. And there are many companies also, of course, serving on the basis of that. Therefore, one has to do the right balancing act. I mean, clearly, I think India has been managing it quite nicely. One, focusing on GST reductions, given the fact fiscal headrooms are available. And we have seen a significant improvement on fiscal numbers, which essentially means consumer prices can come down. And having focused on infrastructure development for the last, say, 7, 8 years, and continue to focus on infrastructure development in India, at the same time, stepping up the focus on consumption-driven growth for India is something is most welcome. That's what market has appreciated. That these kind of steps always used to come by way of representation by the industries, and all of us used to go and make a representation. In fact, this time I don't think many people would have made a representation, but it's coming on their own by way of proactive measures which the government of India has been taking. In fact, our Prime Minister's statement during the Independence Day is the one which actually I would probably say revive the hope and positivities towards the market. Therefore, the participant levels are good. So, therefore, I think the current
Hmm.
momentum that they are seeing is actually is largely driven by that. And second, the other bigger aspect that I have seen always is inflation has been under control. I think first time ever, if I knock off the core inflation, if you look at it, and WPI versus CPI, if you look at it, I think core inflation is down
Hmm.
quite substantially, and therefore, from RBI point of view,
Hmm.
they cut the interest rates quite ahead of time. So, which essentially means today nobody wants to expect the
Hmm.
rates will drop or not. The rates are already dropping. So, the combination of multiple things, I think, quite is working quite well for the Indian market stability point of view.
Got your point, but Bala, do you think, given the inflation data and the focus on growth, could the RBI look at one more rate cut this financial year, or do you think it's pretty much done? They've already front-loaded interest rate cuts, but is there a chance for another 25 basis points in a bid to boost credit growth?
I cannot rule out further rate cut, given the fact RBI monetary policy has been paying attention to the evolving numbers at continuous interval. I think so far whatever they have taken, purely on the basis of the estimated numbers on inflation, estimated numbers on global growth, as well as estimated numbers on domestic growth, on basis which they have taken this call. But having said that, while they have made it very clear that they have front loaded everything, if they've done it because of the festival season, when it began in the month of August,
Hmm.
the Reserve Bank of India this time has ensured that there should not be uncertainty with respect to the rate of borrowing. Therefore, they have upfronted the rate cut. But having said that, the now US also now suddenly changed their stance that from an earlier tough stance that they used to have that they will not cut the rate. But now, of course, the US seems to be thinking about 50 basis point rate cut. And in all probability, my own gut feeling is whole of this year we'll see a 1% rate cut coming from US, given the fact that we are now a bit of slow down both in the farm payroll number and overall growth momentum in the US. If that actually warrants US to go for 1% rate cut, then there will be an opportunity for Reserve Bank of India to relook at the earlier stance and consider the rate cut or at least a stance which will change from neutral to accommodative stance. So as long as that also comes into being, we don't need to cut the rate. As long as the stance
Hmm.
change, also it will be more than enough for the market to get signal that yes, RBI will be there to support as and when it is needed for rather accelerating the overall growth momentum.
Hmm. Okay, let's talk about earnings as well. Do you think the second quarter will be a bottoming out quarter for India Inc. because the new GST rates take effect? The companies will also pass it on to consumers. Uh, Q2, would that be bottoming out quarter? And when do you expect the benefits or the demand upsurge to really kick in to earnings and reflect in the earnings going forward? Do you think that will happen only in FY27? And should one be poised for double-digit earnings growth FY27 onwards?
Yeah, by 27, definitely the growth rate will be much better than 26. But having said that, this festive season, my own belief is will be very good. I think whatever the efforts that government is putting definitely will come true because it's the one intent is very good, sincere effort which is being applied. I think GST Council has been meeting at frequent interval to ensure the goods prices are dropped. At the same time, they have also been insisting very clearly that whatever the GST cut will be given, that should not be used actually for increasing the profit. Rather, it should be passed on to the consumers, which will have a natural pull in terms of demand picking up. At the same time, the credit growth, we already start seeing the credit growth. My own belief is will come close to about 12% compared to the earlier trend of about roughly about 9 to 10%. So as the credit goes become about 12% and then combined with goods prices coming down, I would assume we would see bumper quarter rather sales say between the October to a December period. And last, of course, is the this year monsoon has been pretty
Hmm.
good in terms of agriculture output. I am actually privy to some of these
Hmm.
agriculture output. Given the fact I closely track it, there is personal interest also there in the segment. When more I look at it, agriculture outcome, not only actually production has been very good, even the price realization also very good in certain parts of the country. And this, in my view, would have a bumper second crop. But I think January crop, if you look at, there will be a bumper second crop which will come across the country, which will further boost actually rural consumption. Therefore, the next year quarter, if you look at it, I think we'll probably see a bigger outcome coming for autos, tractors, two wheelers, and other consumer goods items. I think we'll probably see the fourth quarter onwards till the first and second quarter of next year. We'll see reasonably good growth momentum coming back.
Hmm. Okay. So rural focused plays, uh, they should be really kept on your radar. But let's talk about insurance as well, in particular, because there's still they're still in talks with the government. No clarity in terms of input tax credit and inverted duty structure as well. So tactically, would should one avoid insurance now? Because over the long term, of course, removal of GST will deepen penetration. But tactically, what's the call on insurance? Is it an avoid till the time there's some clarity that emerges on that front?
But still, from a fundamental business point of view, there's no negative. I think if you look at underpenetration versus the way the insurance industries can penetrate, given the fact that like a mutual fund, even insurance industry also very well underpenetrated. Therefore, the opportunity for them to grow the customer pie is very, very large. But the GST is will only what is the confusion in GST is like whether you'll get input credit or not input credit. And whatever earlier the stands that used to be there, which used to increase the overall profitability because of the GST related input credit. That's the only confusion which is there. But that is not the driver of the overall fundamentals of the business. Therefore, I would assume the insurance sectors will remain one of the sectors, a prominent sector, as we see in the case of AMCs, as I've seen in the case of banking sectors, both private and public sector. Among the financial sectors, the insurance sectors will remain one of the prominent sector to stay convinced. I mean, stay with high conviction. But I think the GST will have a temporary impact more from the
Hmm.
point of view of how the input credit will come and actually have. The earlier they used to have input credit, therefore the profitability could have been a little more higher. With the input credit not coming in, the profitability will probably for a quarter will be low. But I think it will not change the dynamics of the industry from a fundamental investing point of view.
Bala, looking at the August data, the cash pile marginally dipped. So, how are you calibrating cash levels across your equity schemes right now?
Cash level normally the thumb rule is about 3 to 4% is the one which you normally keep. So anything which is more than 4% cash, it is a cash call that they have taken either because they are negative in the market or they are not able to deploy deploy the funds at certain valuation at which they are comfortable, or they don't want to actually go and invest in multiple companies just because they have a cash. So that's the way people take this kind of calls as a portfolio manager. But I think the dip in the cash, I think, is largely on account of we saw some bit of flows dipping in the month of August, and but at the same time, the number of IPOs are coming in pretty large, and in fact, some of the IPOs at this point of time is coming with a large size ranging from 7,000 crores to almost 14,000 crores size. That continues and getting absorbed. In fact, most of the IPOs and QIPs, the large subscribers are coming from domestic mutual fund along with the insurance companies. Whereas the FIIs have been largely on the selling side. Of course, in fact, they come on the IPO side. I think most of the FIIs do come on the IPO side, but not necessarily on the QIP side. But that's why I think since the supply of papers, I think the way I look at it, demand supply, if you look at it today, to the extent of the supply which is there, you also have the demand is not disproportionate rising along with the supply. So whatever the existing cash is there getting deployed in the supply of issue that you are saying. So to the extent I would say it is dipping into the existing cash to subscribe to these issuances. But I think that something would remain like this as the SIP book keep rising and the cash level will come back to normal. And as the market momentum picks up, maybe they would get actually diverted into secondary market buying rather than primary market buying.
Got your point. There was a substantial dip in the number of new fund offers last month as well. I think which is why the entire equity flow scene was, equity flows kind of slowed down. Do you expect that to continue going forward? Do you think NFOs, the rush of NFOs would slow down a bit here on?
The way I see then I'll give it in two parts. The existing large players like us will have limited room for coming with the NFOs because we have almost exhausted all the options, whether it is coming from the diversified equity funds or from the thematic funds. We'll have limited options. We'll have probably able to come out with one or two NFOs kind of things. Whereas the new guys, when they come on board or somebody who has come in the last few years, they'll have enough room actually for them to come with NFO. Therefore, it will be going to be mixed. I think collection generally, if you look at it as it stands today, 30% of the collections of inflows comes through the NFOs, roughly, rough cut number. 70% inflows coming into the existing funds. My own belief is existing fund flows in the form of SIP that is coming in will continue. The NFO is something collections. Largely, I always consider these NFOs as helping the industry to expand the customer base, expand the market, expand the more players able to raise money. But that might continue. But as a proportion of NFO versus existing, if you take, I think it'll be in the range of about 70 to 30 kind of range.
Okay, let's talk about sector rotation as well. Of course, you mentioned that rural focused theme would do well on the back of record crop output. But how are you looking at sector rotation post the GST reform? Mutual funds have been adding autos, but they have been trimming banks and healthcare as well. That's some data from August. But how are you at ABSL, shifting sector allocations and, what's driving those calls? Aside of, autos, which are the other consumption themes you're looking at, and what are you doing with the manufacturing side of the spectrum?
When I look at our own portfolios, the way our team has taken call, clearly remaining overweight on the banking sectors, neutral weight on banking sectors. Where that sectors will remain one of the dominant sectors, including NBFCs and capital market companies. That something remains. On the contrary, would have increased exposure marginally to within the sectors where they were underweight a little bit on the expectation of credit growth coming back. Secondly, FMC sectors is one sectors where we increase exposures on the back of the GST cut coming in, including autos, especially two-wheelers, tractors, and passenger vehicles, where we were a bit underweight. I think they have increased exposure on the GST expectations. And agriculture-related sectors, again fertilizers. There's another sectors where, and then including the rural-related, including cement. We have been bullish on cement, and we are going to increase the exposure to the segment. And neutral weight, of course, remains on IT. At the same time, there are few contra bets. Also, money managers are looking at it from an IT sector point of view, given the fact Valuations are cheap. I think once the interest rate cut starts coming down in the US market, it has got a direct correlation to the IT sector in terms of spending coming back. Therefore, Indian companies having underperformed for almost 3 years, this also comes as part of the contra bet and basis which there are certain exposures also being taken in the sectors. I think largely, if you look at it, no major changes except
Hmm.
marginal tweaking here and there, given the fact more or less we do respect index weight when it comes to the question of allocation to the portfolios into various sectors with plus or minus underweight and overweight. So within the sectors, I think we have made some kind of marginal
Hmm.
adjustment, I would say. Not taken any big call, but except we have taken a little bigger call on the domestic consumption led growth coming back. Therefore, we have taken a little bigger call in that segment.
Hmm. Sure. Got your point. What about premiumization as a theme? Are you looking at liquor, travel related themes, hotels? Any of those themes excite you?
We do have exposure to the hospitality sectors, especially I think you mentioned about pharma. I think we are quite bullish on hospitality sectors, which is basically I'm not naming the company related to the health sectors. Second, hotel industries. This is one of the sectors. Of course, we keep a close track between the large cap and mid cap that we have been having exposures. At the same time, in terms of general consumptions, we also believe that telecom sectors will continue to remain one of the core sectors to take. The other sector, which is airline industry, directly related to tourism, airline industry continues to do well, and that industry, in our own belief, will be the large beneficiary of the spending power going up in the country, and also related directly to the related tourism. The tourism, of course, inclusive of entertainment as well as spiritual tourism, is also picking up. Therefore, airline industry also is one of the sectors where we have been having a bullish view for quite some time.
Okay. Also, what about the likes of Zomato? I think, Eternal is, now among the, most held stock from the top 10 mutual fund holdings, despite, the run up in the stock. How are you approaching some of these new age names?
I'm very selective in that. Nandita. I think, of course, Zomato is since it took the name, when we do have an exposure to this segment of the business. Wherever the business focus is actually to improve the overall the in terms of revenue as well as in terms of increasing the profitability by way of changing the business model, rather than continue to drain cash and then throw the money after the business. That wherever the business model is changing, with the high volume that they are able to generate, that's something we have been turning bullish. At the same time, we cannot, of course, given the fact that we have to look at profit versus the revenue, how much is the improvement that is coming in, and going by that, we are very selective in the segment. At the same time, wherever these narratives are changing, with the initial focus on building scale, and subsequent to that, the scale should convert into the profit. And wherever the profit expectations is getting better in terms of futuristic projections, we do have been having exposure to them, and that's the way we have built some of the quick commerce business. We do have part of our portfolios across the major schemes like fund and equity or large cap fund or flexi cap fund. We do have exposure to this segment of the business largely in the basis of this.
Hmm. Got your point. Last couple of questions then, Bala. SEBI in its recent board meet has approved the classification of, REITs as equity while retaining the hybrid status for InvITs. Could this make REITs a mainstream, alternative to traditional real estate exposure? And also, how are you approaching real estate space? Some of these real estate names have corrected quite a lot from their 52-week highs. Real estate as a pocket has also seen, quite a bit of correction. How would you play this space, and what do these recent measures by SEBI mean for REITs and that becoming a mainstream alternative to real estate?
In another alternative real estate, then these two are different. It's like real estate companies largely driven by the growth projection that they are able to build in terms of residential real estate versus the commercial real estate, how they are building it up. Whereas if you look at REIT, predominantly is the commercial real estate space. REIT. Therefore, these two would be completely disconnected. At the same time, real estate space, while we were bullish in the sectors, the last almost 6 to 9 months, we have been quite neutral, given the fact that now time has come for the sector to get consolidated, both in terms of price. The price rise has been quite sharp in the last few years. Therefore, they got the benefit in the last 2 3 years in terms of market cap of the sectors going up, and we believe that we will see some bit of slowdown in terms of the genuine buyer versus the investors buyer. Investor-led buying also led to the growth. The investor-led buying, our own belief is, will probably take a break, and genuine buying, I think, is the one which will come. Therefore, one has to allow the industry to get consolidated before take a bigger call on the sectors. But having said that, commercial real estate, there has been a pickup, and in fact, REIT comes in that segment. And we as a fund house have been quite closely monitoring the sectors and have been investing in the sectors. But the REIT is something cannot be used for the purpose of multiplying the value by way of P multiple expansion. But this is largely is the regular income kind of things with the dividend payouts which will keep increasing, and also capital gain which will keep rising on the base of the pickup in the overall volume growth that could come, or maybe value growth that will come from this segment. So therefore, this REIT is something from an equity portfolio manager point of view, they will not look at as alternate to the equity, pure equity kind of equity shares kind of things. I think they will look at it more as a hybrid asset class. But having said that, REIT and asset class with the equity definition, definitely people start looking at this, making this forming part of the overall deployment of cash. Otherwise, they would look for fixed income instruments with the low rated instruments. Instead of that, probably they will start looking at little higher risk compared to the normal fixed income instruments. But at the same time, somewhere falls between the equity and fixed income. From a return expectation point of view, it may start appearing in the even equity portfolio as time progresses. The moment you actually look at the market
Hmm.
valuation reaching its non-acceptable level, that is the time probably you will start seeing allocation coming from the equity funds itself into the return asset class.
Hmm. What about data centers? Yesterday Jeffries came out with a report. They said that the capacity could jump 5x by 2030. How is your equity strategy positioned to capture this particular theme? And would you look at telecom players or infrastructure and power players that will supply the backbone? Data center as a theme, does it excite you? Also, there are a lot of other themes that have mushroomed around data centers, like cooling data centers, etc. Would that theme also feature now? Should that also feature in portfolios?
I think one of the sectors which is of course related directly to the data center is one, as you rightly said, real estate. Second is the power, and third is the technology provider. So all the three form part of this data centers. They're all getting captured in the existing companies, which large size companies who have an additional the focus on building data center across the country. So as one of the large beneficiary of this sector is actually the power sector. Uninterrupted power supply with the high voltage power supply is extremely important for the data center to operate with very high speed, with no interruption, no disruptions in terms of power availability. Therefore, we are looking at more of the sectors on this segment, which will be the large beneficiary of the data centers picking up across the country. It's already factored in part of the existing companies who are in this, who are actually having presence in this segment of the market. There are no separate companies who largely would be identified as only data centric kind of companies, and unless until they come in the form of a REIT
Hmm,
and InvIT
that's true.
or REIT kind of things as time progresses.
Sure. Okay. Last question, really, Bala. Beyond all the buzz, any theme that excites you with a longer term time horizon, like say 3 to 5 years? Any theme that you say you feel that has the value, the prospect of wealth creation going forward, irrespective of all the latest buzz. Anything that is looking like a long term sure shot theme that should be a part of the portfolio.
So, if you look at a broader market point of view, I think clearly the fewer sectors are becoming extremely promising, which is the financial service sectors. It remains, I think, my own belief is will be promising. The longer term growth story that still lies in NBFCs and other capital market players. Second is the energy sectors. I think is the one which is seeing significant evolution, and it continues to remain a big area of focus both for the government and state government point of view. That sectors and related allied sectors related to the energy sectors will be the large beneficiary. And given the fact that that big amount of efficiency focus has come from both the regulators as well as the government of India, and also from a user's point of view, the behaviors are changing. These two, in my own belief, is would be a sector would start generating higher level of cash flow as we start generating the multiples can be justified given the fact that increase in profit also will come from these sectors as the more and more efficiency comes in and the utilization rates also goes up. And then solar sectors where we have renewable solar sectors also undergone a major change in the last few years in terms of making it the PLF factors to become more and more prominent. But as we see a progress and more innovation comes in sectors, also this sector could also become one of the promising sectors given the fact that everyone will start focusing on not just on investment, improving the profitability so that ROE can be generated from a shareholder's point of view. These are some of the progress I would say we will
Hmm.
keep the broader interest in these sectors alive.
Sure. And any sector that should be completely avoided at this juncture, Bala, that you're not very convinced about?
Not really. It's very hard to find any
Hmm.
single sectors which is. I think only the sectors in my own belief is would have more than sectors, more on companies. There are a lot of innovations happening, and we'll see some innovations will file, and some innovations I think will give a bumper outcome. Therefore, keeping that very close watch in terms of
Hmm.
extremely promising versus promising but not sure about outcome that will come, especially in the many startup ventures. I think those are some of the things which I think we'll have to just see. But otherwise, if you look at it broader, the way the roadmap is getting built as a country is to encourage every entrepreneurial model in
Hmm.
the country to become successful as they move forward. I think that one will come. Second is valuation related. Wherever the prolonged investment that happens, but not converting into the profit, I would say those are the sectors will go through period
Hmm.
of either consolidation or period of underperformance. That's what something one has to be careful and watch out for.
All right. Great insights as always, Bala. Lovely chatting with you. And we have many more questions, but I'll save them for some other day. Always a pleasure. And I hope to see you again on the show sometime soon.
Sure. Thanks, Nandita. Thank you.
Thank you. Thanks a lot. Well, that was a big market voice on all the sectors that you should be keeping on your radar and what trends are looking like going forward as well. But as we speak, the Nifty, has picked up steam. Expiry day moves, clearly visible, 100-point uptick on the Nifty. We are above that, recent swing high of 25,154. In fact, we are making our way towards that 25,200 mark. Remember, analysts are saying that if 25,200, 25,250 sustains on a closing basis, we could see a retest of 25,400, 25,500 as well on the Nifty. So yes, good going. We picked up steam, 100-point up move on the Nifty. Sensex up almost 360 points. Mid cap index, is has kind of taken a back seat when it comes to the benchmarks. If you compare it with the benchmarks, that's up 0.3%. But of course, broader markets continuing the up move, but benchmarks moving ahead at the juncture. Bank Nifty as well. It's above that 55,100 mark, very crucial level 55,000. If we manage to close above that level, we could see some bit of participation coming in from the Nifty Bank Index as well. That has actually been an underperformer in recent times. Advanced decline ratio looking very positive. 3:1, that's the NSE advanced decline ratio. Looks like all the sectors are trading in the green as we speak. Losers list is very slim, just about 4 Nifty losers. They are from the consumption basket, the likes of Nestle, Asian Paints, Titan, Tata Consumer, and Bajaj Finance is witnessing some bit of profit taking after 13 days of straight days of up move. And what's leading the charts right now are some private banking names, the likes of Axis Bank, Kotak Mahindra Bank. These are the top movers. Some auto names also picking up steam once again, the likes of M&M, Tata Motors, Eicher Motors, Hero Motocorp, etc. Power Grid among top gainers, Adani Ports, JSW Steel. So yes, the list of gainers is long this morning, and we are making our way towards that 25,200 mark as well. So good day so far. Let's hope the momentum continues in the second half. Today is the weekly expiry, so there may be some bit of volatility in the second half, but let's hope that we end near about that 25,200 mark at least. But with that, we are timed out on this edition of Opening Bell. We'll see you again at 3:30 p.m. with closing. But before I go, message for our viewers. Introducing Money Control Super Pro, your ultimate investment superpower. Get live calls, trading and investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts on WhatsApp to help you trade and invest with confidence. Super Pro, where serious investors stay ahead. Download the Money Control app and subscribe to Super Pro today. Well, with that, from me and the entire team that put the show together, thank you for watching. Have a great trading day, and we'll see you at 3:30 p.m. with closing bell. Don't forget to tune in. Have a good day.